Hello everybody and welcome in today's video. So today I want to talk about SentinelOne. SentinelOne is a competitor of Crowdstrike that I've been wanting to analyze for a while. None of this is investment advice. Okay, so let me begin. What is SentinelOne? So SentinelOne, to me, they do the same thing as Crowdstrike, which means that they're a comprehensive enterprise security platform that provides threat detection, hunting, and response features that enable organizations to discover vulnerabilities and protect IT operations. So, um, cybersecurity is so much harder to do than the McAfee days. It's so much harder to do than simply having a bulky software on your computer and hoping that you're protected. No, attacks are much more complex these days, which is why companies are adopting software like SentinelOne or like CrowdStrike Falcon in droves because they want to be protected against these much more sophisticated attacks that happen. And SentinelOne, just like CrowdStrike, play in this space. And they both claim to be the best. They both claim to be the best at what they do. It's kind of like Databricks and Snowflake in the data sector. SentinelOne claims to be the best, and CrowdStrike claims to be the best. And online reviews are equally very, very good. Customers say amazing things about both, and thus it's really tough when you're not a cybersecurity specialist. I'm just an investor or a general tech investor. It's really tough for me to really go into the nitty gritty of the differences between the two, but they generally do the same thing. And I think the better question is there room for both of them? And I think there is room for both of them. But let me go on as to how they differentiate themselves and how these two companies, which really both address that same demand, that same megatrend of cybersecurity, defensive megatrend, companies are not going to cut that during the recession. Here's how they differentiate themselves. So SentinelOne is a challenger. A general idea that I have about SentinelOne is that they have a easier to use structure. They have a more straightforward pricing structure, but they do not have 24/7 human experts. They rely on automation as opposed to having a team of experts that's available 24/7 to pick up a phone for you. And this is what they advertise. This is one of the top cybersecurity tests, very complex, total of 20 different incident simulation protection, and they performed better than CrowdStrike's in that they had 3 incidents when CrowdStrike's had 17 incidents. So in this instance, they are better than CrowdStrike. But then again, CrowdStrike can take a test of their own and say, oh, look, I performed better than SentinelOne on that test. It's all about which test are you going to pick to prove that you're the best. And in fact, CrowdStrike attacks SentinelOne and says, "Oh no, we're better." CrowdStrike actually on their website actually says, of course, that there's a bunch of issues with SentinelOne, and some of these issues are things like partial visibility, reboot required, alert monitoring not as good as 24/7 experts that hunt for you, file reputation being a threat, and they use file hash reputation, which is not as good as an integrated system. They don't have a fully managed endpoint. So they find things that SentinelOne does not. So these products are a little different, and they have different use cases. But I think what we need to know is that customers in general are very satisfied with both products, and there may be room. There seems to be room in the market for both products, but right now SentinelOne is the challenger. That's why they're growing much faster than CrowdStrike, who is the clear leader in this market. So now let me get into the financials of SentinelOne. SentinelOne has an impressive, consistent 120% revenue growth. That is insane. That is insane. Over the past 5 quarters, very high revenue growth. How long can we expect another 120% revenue growth? Are they going to do 120% again this year and next year, despite the recession? Well, maybe. It's a recession-resistant product, even though customers in that space discuss and question spending more. The last thing they're going to cut in IT is cybersecurity. So I think they could have really high growth going forward. Maybe not as high at 124%, but maybe in the 100% range. So that's pretty high. Um, are there any revenue headwinds? Well, there's a lot of competition. CrowdStrike is the leader. If you look any of these two, they spend a bunch of money on Google trying to recruit your company. So, and CrowdStrike advertises against SentinelOne and vice versa. And then there's like a more versatile, widespread solution, which is Microsoft Defender for endpoints, which is generally seen as a lesser solution. I don't see much concentration to be worried about on SentinelOne. Retention rate is really high at 147%. It's actually higher than CrowdStrike. They are recession resistant. Let's leave a growth runway is huge. The total addressable market is 126 billion of spending by 2025. So this is a huge market. SentinelOne constantly, just like CrowdStrike, roll out new products because cybersecurity is dynamic. Threats always change. The number and complexity of threat always increases, and thus these products have to get better and better every time, and companies have to keep investing in that. Growth by acquisition. There's been a little bit of them, and that was quite a bit of money. 600 million actually they paid for Attivo, and that led to a little bit of dilution. So that is kind of an orange flag. And they have a high net retention rate. So marketing is defensible because of the net retention rate. So it makes sense for them to invest in marketing, but it's still a very, very high marketing expense. So that is, again, a yellow or orange flag here in my framework. Let me move on to my framework. Okay, is there any risk of bankruptcy near term? So right now their cash flow from operations is minus 134 million. So they lose, money on a trailing 12-month basis. But they have 1.2 billion in cash. They had a very successful IPO, raised a bunch of money. So they have 9 years until bankruptcy if they keep spending much more than they can, as they do right now. Over metrics is they spend 280 million in marketing a year. So again, if they were to just cut in half that spending, they would be free cash flow positive. They decide to be free cash flow negative because of whatever marketing they spend. They have a very good gross margin at 72%, a little lower than CrowdStrike, but not that much. And right now they're trading at 15.5 times gross profit. CrowdStrike is much more expensive at 26 times gross profit. So the market seems to believe that CrowdStrike will remain the leader. Again, I don't focus much on operating margin and net margin because to me, over time, these will come in over time. Like I focus on growth. I'm a growth investor, so that's what I like. Debt. I love that. They have zero debt, none whatsoever. So they are an anti-fragile company as long as they don't run out of money and they have 9 years of cash left. Dilution, there was a little bit of dilution related to their acquisition of Attivo. Moving on to insider ownership. So this is mixed here. The company is founder-led. One of the co-founders is the CEO of the company. However, insider ownership is alarmingly low at 0.5%. So again, I am a little concerned. I wish there was higher insider ownership. And the revenue per employee, again, is almost twice as low as CrowdStrike. So I was already not satisfied with revenue per employee for CrowdStrike. And it's even lower for SentinelOne. So this is one of my key metric that I appear to be the only one to use, but I think it's very important to look at revenue per employee and employees generating at least more in revenue than their salary at $167,000 per employee. You must be really close to the salary that you make working for SentinelOne. So I'm concerned. This number will go up. This number will go up as revenue growth scales, but it's pretty low. And then moving on to the stock price. So the stock price of SentinelOne is down 78%, almost 79% from its all-time high. And as a comparison, CrowdStrike is only down 52% from its all-time high. It's crazy that I would say only down, knowing that these are extremely innovative companies. But nonetheless, SentinelOne has been battered by the market, much more than CrowdStrike. CrowdStrike really thinks, the market really thinks CrowdStrike is better. And so in conclusion, me too, per my analysis, I think CrowdStrike is better. I don't like the crazy marketing spend on this company. And I do not like the fact that the CEO has such low insider ownership. But then again, they are a much smaller company. And on some of their reviews, many people claim that this company is actually better than CrowdStrike, and it's all about are you an industry insider, right? To me, this company is higher risk. To me, investing in SentinelOne is higher risk because I am not an industry insider, and so I'm unable to tell whether their solution is really that much better than CrowdStrike's solution, which is why I like CrowdStrike better. I nonetheless see how this could make sense as, say, a 1% position. If one has a 3% position in CrowdStrike, you could have 1% position in SentinelOne. You still have pretty high expected value, right? They likely will have a role to play in that future, but CrowdStrike to me is still the clear leader in that space. And lastly, title of the video was could it 10x? Well, right now the market cap is only $4.6 billion. Again, for very innovative, highly needed, extremely high growth, 120% a year growth, revenue growth company. I do not think that is a lot. I think that company is way off its highs at 78% down. And so could we see this company be a $46 billion company? Well, CrowdStrike just a few months ago was $46 billion company. So yes, we could totally see that, and that would be a 10x. And adjusted for dilution and dollar dilution, the trademark of the channel, beat the denominator, is the idea that $1 today is $1, right? But $1 of 2032 will actually be much more like 25 cents of today. Well, if we adjust for that, we could see that in 2032, could we see this company be worth $11.6 billion? And the answer to me is yes, it's possible, but it is higher risk. It is higher risk because again, the insider ownership is not as high. The marketing spend is very, very high. Productivity is not as high, and so it's a question of like if they stop the marketing machine, what is it that will happen if they stop the marketing machine? Plus, they are free cash flow negative, right, with this marketing spend as well. So that is one of the issues. But as a speculative investment, I could see it within a portfolio of security stocks, and I do think CrowdStrike is better alternatives. So what am I doing with this stock? I am not buying this stock. I am putting it on a watch list, and I think who knows with this market, it could drop another 10 or 20%, and then could become even more attractive and more than compensate for these risks. So anyways, none of this has been investment advice. Thank you so much for watching. This is entertainment/edutainment only. I appreciate the support. I appreciate if you can subscribe and like the video, and please follow me on Twitter at @BeatTheDenominator. Thank you so much. Have a great day.